think we've done extremely well. The last year specifically, we came off a bad year previous 2008, 2009. Through the credit crunch, we made many changes in financial services. We were also able to reprice some of our customers through the process, and we're happy to see that return to profitability, certainly.
Of course, you have been going through a restructuring of the business. You've sold a number of non-core businesses. You've also made some small acquisitions like Rossgrove Chickens and the remaining interest in Midway Chicks. Where are you in the restructuring at this stage, and how has it benefited you through this period?
We're almost at the end of the restructuring phase. I think we're entering into a growth phase at the moment. It actually benefited us to the sense that we've aligned the business. You know, we aligned it with the grain value chain. It's profitable for us. It's what the company has been doing for the last 87 years. So certainly it's what we understand. And I think to that benefit, we can see the alignment throughout the company, and we can see it coming through in the numbers.
Part of the changes that we're seeing in that regard in terms of restructuring the business is to improve your balance sheet and your gearing ratio, to actually strengthen your borrowing position. Where we had capex pegged at 306 million for the full year, I mean, how much of that have you spent, and where exactly has that been directed?
Yes. Look, we have spent some money. We've expanded on the animal feed side of the business, our knead and our edible oil side. We've also expanded on that. So certainly what we've done, we've acquired some of the Midway Chicks business. There was some capex spent on that. So in general, I think the big part of the spending also on the handling storage side, we've increased our bunker capacity. Our silo capacity has increased to 350,000 on top of the normal silo capacity. So it is money that we've spent for the future, and we will see the benefit coming through in the future on that capex.
Francois, your view on the turnaround at Afgri, is this a share that you'd be looking at this stage of the recovery?
Let me put it this way, Stephen. According to a speaker at the Agri conference yesterday in Durban, investment in the agri sector in sub-Saharan Africa is at unprecedented levels. And I think the focus on agri businesses in Africa is going to become more and more important going forward. Also, for example, the BHP Billiton Potash proposed merger just tells us how important food and food procurement will become in future. And Afgri is a company that will play a very important role in the future, and I think that they're taking the right steps at this stage to become a more dominant player.
Would you be an investor at this stage though?
Well, it's yielding 6.4% on the dividend yield. Cash in the bank just around 640 million rand. For a conservative investor, definitely, yeah.
Well, Chris, let's get into that Africa strategy then, because that is very much the appeal as it stands right now. You've got a presence in Zambia already. What kind of potential are you seeing there? Because being highlighted is the fact that we've got other agricultural producers, eyeing the continent just as aggressively, so that competitive playing field is increasing. And Zambia itself is quite a strong producer in that field already.
Yeah, look, what we've done is we've obviously created a core business for us, and that is what we're duplicating in Africa. And we've done it very successfully in Zambia. We are in a position where we invested in silo capacity and grain storage capacity in Zambia. We've done that with local farmers. We identified more opportunities there. And we've also been able to secure the management of the silos in Lusaka. So it does help us in terms of the supply chain management, and that is really our focus. What we do very well is make sure that the farmer is supported, and that we also support the grain management and the grain storage and the movement of the grain from the producer to the processor. And that would be our focus in Africa.
Just staying with grain storage, of course, the Competition Commission last year initiated an investigation into grain storage rates and obviously the SAFEX rates for your company. How's that progressing at this stage? Do you think you could be fined? Have you set anything aside to cover a potential fine?
Look, what we have done, obviously we are in discussions with Competition Commission, and we will work with them. I mean, what the competition has indicated as far as the SAFEX price is concerned, SAFEX utilized the storage rate on a daily basis, and it's important for the customers dealing on SAFEX, whether it's a bank or agricultural company, to know what that rate is. And what we obviously do is to work with Competition Commission to see what we can do in terms of that Competition Commission inquiry.
Well, there's pressure to an extent coming through from that end. Another one is locally electricity tariff hikes. I mean, locally, but it's also happening in Zambia as well. And that would exert further pressure on the input cost base of the business. Are you seeing this being passed on fully to the consumer, or are you looking at subsidizing that partially?
Look, we will subsidize a portion of that. Over time, I would think the medium term it would be passed on to the consumer. Obviously, for the production of maize, especially on irrigated land, it does have a big impact for the farmer, and that will hurt the farmer in terms of just the production levels and the cost of the production. As far as we're concerned, we see that on especially on our handling storage business, but also going through to our processing businesses, where the impact of the increase is felt at this point.
How about some of the other headwinds you might face at this moment, like uncertain economic growth here in South Africa? We have consumers still not really spending. We have food deflation in some categories. Are these challenges for you?
Look, some of them are. We have seen in terms of just the farmer and the wealth of the farmer in terms of the commodity prices, we've seen a bit of pressure there. But in general, I think that the company and the industry at this stage is quite a healthy environment. We don't see too many problems. Obviously, you have question marks in terms of land reform, question marks in terms of electricity increases, but we don't see that having a negative impact long term.
So what kind of growth target are you chasing for the next year?
Well, we obviously want to stay to real growth. We do say to our investors that we want to achieve a 20% return on equity on a consistent basis. I think it's something in the past that Afgri was very cyclical and that we are trying to take away. We have gone through a very successful restructuring phase the last 2 years, and we see that even if you take our headline earnings per share, although it's 6% at this stage, because of the restructuring, there are once-offs in the prior year that you don't add back for EPS, but generally we're looking forward to a very successful business.